The subject, wealth and income inequality, are the biggest moral crisis across the globe today. The gap between the rich and the poor has reached critical proportions. Can we secure our financial future? Yes, we can. So today I'd like to introduce you all first of all to what are assets. An asset, in simple words, is something which puts money into your pocket. Examples of assets can be stocks, bonds, real estate, mutual funds, etc. So, an asset puts money into your pocket, and the next thing we're going to learn about is a liability. A liability is something that takes money out of your pocket. Example, we can take it as cars, bikes, new clothes, all the unwanted stuff which we can't afford, but it's not required. Those are liabilities. An asset is positive cash flow, whereas a liability is negative cash flow. There are different kinds of people. There are the rich people, the middle class, and the poor. Each people use their money differently. That's the only difference between the rich, middle, and poor. So, the income statement of a poor person would look something like this. He gets his income, it goes into expenses like house mortgage, education, taxes, and other stuff. So, he doesn't have enough money to invest in assets or liabilities. But the middle class, this is the income statement of a middle class person. He gets his income, he puts it into expenses, and then it goes out into the liabilities. Maybe like a new car, a new bike, occasionally buying new clothes, which is unwanted. Then it's the income statement of a rich person. A rich person, we must remember, always invests for cash flow. So, a rich person gets his income through his assets. It goes through his expenses, which may be taxes or maybe insurance. And then it goes back into his assets. So that way, he's still continuously investing his money and he's investing it for cash flow. There are 3 different kinds of professions you can take up. You can be an employee working for someone else, or you can be a specialist. You can be a doctor, an engineer, or maybe not an engineer, but a dentist or something like that, where you work for yourself and not for someone else. And then is the business owners. Business owners have the most tax advantages. They pay the least in taxes. So, the good news about it is whether you're an employee, specialist, or business owner, you can all of y'all can invest in assets. Stocks, bonds, mutual funds, real estate, they are open for everyone. Now the bad part is the employee, specialists, and business owners also get to invest in liabilities. The thing you can make a car into a liability or an asset. If I have a car and I use it as a taxi, it's an asset for me, as it is putting money into my pocket. But if I just roam around it for no use and it has no worth to me, then it is a liability. So these are the main differences between assets and liabilities. Assets are positive cash flow, liabilities are negative cash flow. If you liked my video, you may comment, subscribe, and share to all your other friends so that they may get the literacy, financial literacy.